Hey there folks, Bryce Holdaway here, host of The Property Couch, and with me is Nerida Conisbee, the Chief Economist at the REA. She joins me today like she does every month. Welcome, Nerida.
Thanks for having me.
You're welcome. So folks, stick around. At the end, we're going to do what we always love to do. We're going to check out the most clicked on auction, most clicked on listing, the most expensive real estate, and also the most clicked on rental property, which will be a bit of fun. But hey, Nerida, we are in interesting times within the economy. How would you assess where Australia sits in the global economy right now, and what people who are watching this should be considering about job security and the outlook?
All right, so maybe we start with the global economy, and there are a lot of challenges at the moment. We've got a US-China trade war that is continuing to be problematic for both economies. Chinese economy is still growing, but it's seen its lowest growth in 30 years. Not great for Australia. It's our number one trading partner. So with China slowing, it is quite problematic for us in terms of whatever we sell back to China, which includes things like resources, education, agriculture, those sorts of things. We've got Brexit, which is continuing to roll on. So, but Brexit's not so problematic for us. They're our seventh biggest trading partner, but it probably will mean high levels of migration of UK residents to Australia is what we're thinking. And then we have Europe heading to recession. We have parts of Asia doing okay, but really the big economies are the ones that are struggling, and not just struggling economically, but also politically, which for Australia it does flow through to our outlook, and particularly our economic outlook.
Are we the net positive or negative beneficiaries of that? Because we're considered politically stable, it's a nice place, we're isolated, weather's good, quality of life's pretty good. So as you say, like Brexit with the immigration, is there a bit of an unforeseen part of being where we are, being so isolated from some of that sort of world turmoil?
Oh, absolutely. Like if you have a look at commercial property transactions, we're now one of the number one locations for people to invest in. If you're a Chinese investor, you'd be quite nervous investing in the US at the moment, for example. If you're a German pension fund, you probably invested a lot in the UK. You're probably looking to Australia now. So commercial property will do well. If you have a look at, say, agriculture, we know agriculture in WA is really seeing a lift at the moment, probably likely because of the New South Wales drought. But China, they don't no longer import so much from the US. They need to get food, in particular, from somewhere. Australia.
We'll take that. Yes.
So it's hard to tell. So we know that if China slows, the modelling that's been done by the RBA shows that the Australian economy slows. So, it is a problem, but it's never across the board, across Australia, that we see the same impacts. And every time Australia's had a slowdown or has had a recession, there's been some places that have been impacted far worse than others.
So therefore, what would the person who's watching this, in terms of drawing some comfort around your expertise and what you're seeing, what would you say to those people who are in reasonably secure employment and they've got a house and they're not hocked up to the eyeballs? What sort of optimism or pessimism would you be sort of offering to the person watching this?
Yeah, I suppose that talking down the economy gets headlines, and so if you do read the papers, you probably thinking that things are far worse than they are. Whereas if you have a look at the unemployment rate, sitting at 6.2%. So it's still low. We're still seeing wages growth. It's not great. We've still got economic growth. We're not heading towards recession at this stage. We've got room to move on interest rates. They're not at zero at this stage. So we still have a little bit of a leeway in terms of where to cut. We're a very safe economy. In longer term, Australia is just so well set up. We've got a stable political system. We've got good economic growth. We've got a diverse economy. There's a lot to be positive about. So I think you do need to take it into account that when the media talks about problems in the economy, they're trying to sell stories, whereas overwhelmingly there is a lot of positivity out there.
Well, it's always when you've got 6% unemployment and it goes to 8%. Wow, that's terrible. But it still means that there's 92% employed. So always thinking of the flip side of that. In terms of, if there was a change in president, for example, at the next ballot,
the US election.
In the US, what sort of impact do you see that on? Because it seems like there's the belligerence of Trump and his negotiating style. Do you think there would be so much momentum that the next person would continue that, or do you think that there would be a more sobering approach to the US-China trade debate.
I can see why Trump is using trade as a bargaining chip with China, because I mean, ultimately, this isn't just about trade. It's about, you know, stealing of IP. It's about security. You know, there's a lot that's going on between China and the US. I think with the US, though, at the moment with Trump, one of the problems is he's quite he makes snap judgments, and no market likes snap judgments. You know, we like the certainty. We like to know it. You know, when you're buying a home, you like to know, well, what's my interest rate? How will that change over time? When you've got taking a job, you like to know what your income is. You know, and then if someone keeps changing that, you know, if you're getting told by your employer your wage will get cut by 20% next week, it does create a lot of angst. And so if you consider that at a political level, that's one of the challenges of Trump, is that he'll tweet comments and then suddenly things start to change and people aren't sure what's happening. And if you have a look at businesses at the moment, and investors in particular, you know, we saw that inversion of the yield curve. We're seeing a lot of money piling into bonds. We're seeing money piling into gold, of all things. So, you know, people are doing things like that because they're nervous, not because the US economy is going into recession. And again, like Australia, the US economy, it's not doing too badly. You know, it's slowed. They're cutting rates, but they've still got low unemployment. They've still got economic growth. You know, there's still a lot of positivity out there.
So for the benefit of the people watching this, you know, in terms of the bonds and the gold, they're just really predictable investments where people could just harvest away and take away the volatility. Is that right?
Yeah. So, you know, with a bond, you know exactly over the 10-year bond, you know what you're going to get paid at the end. And, you know, people are buying German bonds, which I think we've talked about before, but, you know, 30-year German bonds, you lose money over 30 years. So, you know, people are putting money into investments that they have a guaranteed loss over a 30-year time period. So it doesn't, you know, from investors' perspective, it looks like we're heading into recession because of their behaviour, and that was the inverted yield curve. But if you have a look at the economic data, it's slowing, but we're not yet into sort of scary recession-type conditions.
Oh, very good. Thank you for that. Now, you offer some really great insights through your site, and one of those is, have we now seen the end of the Hamptons renovation? Is that a thing of the past?
Yeah, so we've been doing a lot of insight series for realestate.com.au, and one of the questions came up: is this the end of the Hamptons? And they didn't ask me because I wouldn't know, but I did have a look at Google Analytics and tracked over time what's been happening to the search word Hamptons, and it does look like it peaked in about May. So I don't know what's next. It didn't tell me what's next. But
well, you do have a prediction, don't you, in terms of the style that's coming next?
Palm Springs.
Palm Springs.
Yes.
I think the current series of some of the reality TV shows have got that. But what was interesting about that curve is it's sort of when Hamptons went like that, and then it's just come off. I still think they're the edge. My wife's inspired with the Hamptons.
Oh, I think most people
will be for a while. So there you go, folks. You heard it here. Maybe the Palm Springs is next. Hey, can you tell us a little bit about the current state of housing in the regional markets? Because there's a number of trends that are sort of evident at the moment, isn't it?
Yeah, it's been quite interesting. I presented at a Ray White regional summit a couple of weeks ago. So did quite a deep dive into
one of your many presentations every month. Yes.
Always different. And one of the interesting things was looking at how different regional Australia is. So, you know, we have talked a lot about a downturn, but that's really Sydney and Melbourne focused. If you go somewhere like Geelong, you know, Geelong continues to do really well. We are seeing a pickup in pricing in Mackay. So Mackay has been one of the toughest markets over the last decade, but, you know, mining is returning. So even places like Mackay and Fitzroy, you know, are starting to see some slowly positive signs. On a town and suburb level, we are seeing quite strong growth and anything related to mining. So as soon as you're near a mining town, if you've got a lot of staff coming in, you need more housing. We're seeing quite strong rental growth for 18 months or so, and that's flowing through to pricing.
I guess it'd be interesting to see whether the investors are going to flood back into that market too, given that they're still in the shadows of some of the other experiences on the downturn. But
yeah, I know, you'd have to be very brave. I actually think the pricing is probably being driven by investors. So I think there's been some early stage investor activity, pretty much following that rental growth.
Yeah.
But I guess it's a timing issue. You just want to get in and get out before things really start to switch.
And make sure that you learn a few lessons of the past. I think I'm keen to get someone on the podcast who was part of the boom in the heyday to sort of try and unpack what that looks like. So stay tuned, folks. I'm definitely working on that. So there's what about weather conditions?
Yeah, so New South Wales is obviously very challenged at the moment, and it's been quite interesting. We won't really talk too much about rural and agribusiness pricing, but surprisingly, it's holding up okay. And a lot of people are buying farms for water rights, and there's no water, but they're getting prepared for the next time there's drought in New South Wales. So pricing in that part of the property market are doing okay. Some towns are actually doing okay. So Tamworth, West Tamworth, for some reason, seems to be picking up a little bit. So, there's not as much, there's a lot of negativity around the drought and, terrible conditions for farmers. But in terms of property, we are seeing, reasonably positive conditions, which is surprising. The other impact, of course, is which I talked about before, is New South Wales is in drought. So, but WA is doing really well.
Yeah.
If we go south to Victorian farmers, the Rabobank do a survey every quarter and found that dairy farmers are particularly happy at the moment. So again, a lot of it to do with the fact New South Wales in drought and other parts of the Australian agriculture sector do quite well.
Well, I live in regional Australia. I live sort of down in Torquay on the surf coast, and I just have noticed how green everything is. We've been getting so much rainfall, so it's amazing for us. So huge contrast to New South Wales, but So all right, well that's our regional housing. What about price rises in the suburbs? I mean, you had a headline recently around price rises remain in premium suburbs, but not much positivity for the rest of the capital cities. So
not yet.
What are your thoughts around that?
Yeah, so prices are still going backwards in Sydney and Melbourne if you look across the capital city. But you go to Falklands and prices are up 20%. Collaroy prices are still double digits. So anything premium in Sydney is doing quite well at the moment. If we go to Victoria, we're not seeing the flow on yet to pricing for premium suburbs. We're seeing very, very high views per listing. So Albert Park is actually seeing the highest views per listing in Australia at the moment. So it's
bit of aspirational there as well.
Yeah, well, it doesn't normally rate that high. So when we were seeing really strong growth in Melbourne, we were seeing places like Seville do very well, Montmorency, Briar Hill, Warrandyte. When the market was red hot, and places like Albert Park dropped right down. Yeah. And I think because it was so expensive, the prices now in Albert Park are down 15%. So, I think that's creating a bit of excitement, I guess.
Yeah, it's an interesting market, though.
It's expensive. I mean, it's such an expensive suburb, but obviously 15% off does make it more attractive for more people than it otherwise would. And
people playing at that space have usually got a lot of money, right? So they're usually sort of transacting between each other. It's a little microcosm of the market there because it's such a great part of Melbourne, given proximity to the city and the bay and the lake and all those sorts of things. But most people aren't playing in that space.
No,
so
absolutely. No, it doesn't. I mean, the median would be, I don't know off the top of my head, probably 2 mil plus.
Yeah, so, easy. Yeah, easy. So, Cairns did all right over the last quarter.
Cairns did okay. I was looking at price growth at an SU4 level because that gives us the capital city growth rate, and Cairns is an SU4. So over the quarter it went up. So I don't know, maybe mining. I don't know exactly what's happening in Cairns, but it's gone up a little bit, which I don't know. Maybe it's just a bit of an anomaly.
Yeah, we'll track it over a number of quarters.
Months is always been
we'll talk about median shortly, but there's a bit of a flight to quality in Queensland. So a bit of activity on the Gold Coast.
Yeah, Goldie's doing well.
But not so much Brisbane.
Yeah, so Gold Coast is looking very Sydney-like at the moment. So Sydney, we're seeing really strong growth in premium. Gold Coast is the same. So obviously the price point for premium in Gold Coast is quite different. But, the price growth in $1 million plus suburbs is getting up to double digit in many places. So Gold Coast doing well. Brisbane not so much. It's still...
Come on, Brisbane. We've been talking about you for 4.5 years now. We've been waiting.
Yes. Places like Ipswich are doing okay. So it's kind of this cheaper end of Brisbane that's doing quite well, but premium Brisbane isn't moving. We saw a lift in inner city Brisbane, but it was being lifted by apartments, which I think is quality related. There was a lot of new apartments built. So if you had an old apartment in Brisbane, you probably haven't seen the same level of price growth. The issue with medians that we'll be talking about.
We will talk about that too. But the Gold Coast is interesting, isn't it? Because, it's largely got this beautiful location, but the capital cities, you know, an hour and 20 minutes up the road, and you know, it's largely retail and tourism, those sorts of things. But there's no more land left to build on. So unless you're going to be seduced by going over the border or sort of going to the northern pockets of greenfield on the Gold Coast, if you're buying in those tightly held areas and a house rather than sort of the higher density stuff, that's just going to get scarcer and scarcer.
It will. I mean, so Gold Coast is surprisingly low density when you move beyond that real
surface, broad beach.
Like if you move inland, it's, you know, 600 square metre block. So it is quite low density, and there is a lot of pushback to changing that. You know, people are okay. People that live in the Gold Coast are okay about the high densities up on the water, but move inland, they're not so happy about it. But we are seeing a lot of demand pushing south. So Tweed Heads is always been pretty cheap, but that's seen quite strong growth at the moment. So it's definitely changing. And the other issue that will potentially change it if we do see fast rail between Brisbane and Gold Coast. And that was one of the things mentioned in the budget this year, that they were going to do
It'd make a huge change.
Oh, yeah, you can get half an hour from Gold Coast to Brisbane.
It's like Geelong to Melbourne.
Yeah,
it's like,
Geelong, that would be another good one.
But seriously, because you just have this amazing lifestyle, because everyone on the weekend in Brisbane wants to duck off to either Main Beach or Caboolture anyway to try and
such a
beyond.
Part of the world.
So imagine if you could get to a capital city in 30 minutes. That'd change it, particularly when you've got the border and the hinterland all blocked to get in anyway. So
yeah, it'd be good.
Go Gold Coast. All right, so we talked about, we hinted around the medians before. It's the popular measurement.
It is,
but it's
people love a median.
But it's flawed, isn't it, at times?
Well, it can be flawed. I mean, but it's the one measurement that we do get the most complaints about, and the most complaints about people saying it's not indicative of the market, it's not what they're seeing, they can't see their home increasing that value, and they're not. You know, a median is, you know, it's the middle price in a series of sales, so there are a lot of things that can mess it around, and the main one being is sample size. So, you know, we restrict it to 30 sales plus, but the problem is, if we, you know, it'd be good to use more sales, but then if you start doing 50 or 100 sales, you start to then knock out a lot of reporting. So, you know, so on one hand, we're wanting to give people a median. We want to use large sample sizes, but we have to kind of create a balance between doing that. And then there's issues in new home areas that, you know, you add in a whole lot of new homes and suddenly the median jumps. But
it was a farm, it was a paddock, and
it was a farm, or it was a very you know, low grade residential property. But those low grade residential properties may see a bit of a lift because there's better amenity, but they're not seeing a 60% plus increase. So, you know, we're always having discussions. You know, do we not include growth areas when we're reporting medians? You know, what sample size should we use? There's always a lot of discussion around that.
Well, we talk about that being fool's gold because sometimes that's what people use as a pitch as to why, oh, look how much it's grown in the last 2 years, but only need to go to Google Earth and sort of go back 5 years and see what it once was. And then if you think about any of the premium, just think about Toorak, for example, if they had a development of one bedders that all hit the market in one particular quarter, just the fact that it would skew the results down that way, you'd see that, you know, Toorak's dropped significantly.
Grab a bargain in the match.
The reality is it hasn't. So.
No, and even renovation activity, you know, when we look at the amount being spent on knockdown rebuilds in Toorak, they're, you know, 4 million average. So, you know, you put on you've got a, I don't know, $6 million property and you put a $4 million home on, then, you know, that provides a lift, but it's, you know.
Hasn't done that to everyone,
No, it hasn't done to everyone. So it is a tricky measure, but, you know, I think you do need to. Modelling it through an index is slightly better because you are trying to create an environment where you're looking like with like, and you're looking over time across the whole sample. So not the whole, you know, the whole suburb or city. But
and the index becomes then a percentage of the...
It becomes a percentage growth. It becomes
105.6 or something,
And so you tell people, it's gone from 1.5 to 1.55, and they're like, well, what does that mean? I want a number. So people love you know, they love to know the median for their suburb is 565,000. You know, it gives them a point of reference. Yeah. So I can see the value of medians, but I think you do need to just be really careful using them. And, you know, there's better tools now. So and we have... you can price your property on our site, so automatic valuations are available. If you subscribe to our site, you can get that for your property or any property really. So
I get that. Thank you for sending that. Do you crunch the thing and send it out to me, or is it someone else behind the scenes? No, that's good. It actually does just keep you up to date and gives you a fresh idea around.
I mean, our data science team could talk about the challenges with that data, but, because again, a renovation may not get picked up and takes time. Knockdown rebuilds can take time. So I think with any market, you do need to do your research properly, talk to local agents, look at previous sales. You need to really make it your own.
And that's the challenge, right, isn't it? When you have a computer or a model predicting a price versus, because we're doing that all day, right? We're doing comps, we have to compare apples with apples and compare the bruises, and it's difficult for a machine or AI to do that, but I'll get better.
They're getting better. I mean, now the data is so amazing. So, the data gets richer and richer, and, we're getting more and more information that's available. But again, the modelling becomes complicated because if you put too much into the model, it becomes overcomplicated and it becomes quite difficult. I mean, we've been talking to our data science team, and they think they can provide a price forecast for every house in Australia. But again, it becomes it probably would work for most homes, but there would be a few people that it doesn't work, and then, it starts to become quite problematic.
Just make sure you're in the bell curve, right?
Individual level, totally.
Auction clearance rates, what can we read into them? They're up, but the volumes are down, and then we've had AFL football over the weekend. What are you reading into the clearance rate?
Yeah, everyone loves the clearance rate. They're very quick data. It's very simple to understand. It is high. I mean, you really can't look at them in any market except Melbourne and Sydney to be able to get a decent gauge. If you have a look at Hobart, it's regularly 0% clearance rate, even though it's one of the strongest markets. But so Melbourne and Sydney doing very well at the moment. Majority of auctions are in premium suburbs, so that's again reflective in what we're seeing in pricing and what we're seeing in search. So they're up, and but there's been a big decline in auction activity. I mean, Sydney over August was down 25% from August last year. So if you consider August last year in Sydney, we were right in the middle of a downturn. There was actually less going on at the moment. I think sellers are just sitting on their hands and kind of watching and waiting at this point.
It'd be nice for a few more listings in, not just from your perspective from the site, but for our team, we'd love to see more listings. But in terms of it just seems like it's a little bit. The properties that we're buying are hotly contested, in demand. But when you've got so many that are private and so little that are going to auction, that clearance rate is a little bit hard to read. Given that, imagine if the pool was back where it normally is.
Yeah, it'd be quite different.
Clearance rates would be different. All right, tomorrow's the day. Interest rates. Here's your chance to tell us what you think is going to happen. I mean, how much further can we go in terms of?
Well, we're at 1%.
Yeah,
so
but in terms of
probably 4 more cuts there.
But in terms of making a difference, right? Are we at the point of diminishing returns?
Yeah, I mean, there is only so much interest rate cuts can do, and a lot of people see them as kind of the saviour of the economy, but it stimulates the housing market. We can see that for sure. It should stimulate things like retail trade. It should stimulate business growth, wages growth, but just doesn't seem to be occurring as much as we would hope. So it's still quite a lot of negative economic data. Oh, not negative, but not so positive economic data out there.
With the tax cuts that people got, it's not necessarily flowing through to spending yet.
No, and this is the thing. Like, on one hand, you can give people extra money, but if you can't change their sentiment, they're not going to spend it. So if people are feeling a bit cautious, which seems to be the case, if you look at consumer confidence, still quite low. So even if you give them a bit of extra money, they will probably save it. And if they're not feeling confident, they'll spend it if they're feeling pretty happy. But, at the moment, things are a little bit shaky and making people a bit nervous.
So really a battle between fiscal and monetary, right? So we want the government to spend a bit more money, but they don't want it because they want to deliver a surplus so they can guarantee their election promises. So then it's left to the RBA to do the work. So there's a bit of argy-bargy there.
Yeah, there's a lot. I mean, there's only so much the government and the RBA can do anyway, because all they can do is try and stimulate the local economy. They can't really do much to stimulate they can't do anything to stimulate the global economy. So it's a tough one. And at the moment, the biggest problem is that the global economy is shaky and there's not much we can do about it. So, where will the growth come for Australia? So, again, it's easy to get very, very negative, and things like trade wars can be resolved quite quickly. So, at the moment it doesn't look great, but, next week might be a lot more positive. So it's It is uncertain, I guess, the outlook, which is making things quite difficult to predict.
As long as we can just get Donald to stop tweeting, that'll make a big difference. But
shut down Twitter.
The local economy in Richmond would be doing pretty well, I would have thought, for the last few days anyway, down Swan Street.
I know, retail trade for all those bars and restaurants would be well and truly up.
Unemployment's not an issue in that
not,
particular
but,
street. Yeah, exactly. No, it's very quiet in Western Sydney. Hey, let's have a quick look around the grounds on your site. So we've got what we're going to do is we're going to show this one here in Coburg. But this is the most clicked on listing in the last 7 days. And you think, oh yeah, not too bad. Reasonable street there in Coburg. But when you have a look at the price, you think, oh, that'd be pretty good if I could pick that up. But let's have a little look. She needs a bit of work.
And a lot of work.
Have a look at that carpet.
It's quite original, doesn't it?
I don't know why that carpet went out, to be honest, but I think there's some broad appeal in that.
I love the matching too, the green walls with the... Actually, our first home looked a lot like this.
Really?
Yeah. A fake brick clad home in Heidelberg.
But obviously a bit of work needs to be done on this. I dare say at that price point we might need some stumps underneath.
Yeah, I think so. We will need a bit of work.
But there's your green back again. But so that's the most clicked on residential listing. Let's have a look at the most expensive in the last 7 days. And that is the atrocious view that they're faced with. Have a look at that, just towards the far northern beaches there. But this is a pretty epic house. I just escaped me 5.2 million. So if you have a lazy, but look how close it is to the ocean. That'd be pretty good.
Pretty much on the ocean, isn't it?
Yeah.
One house back.
You live in the northern beaches by any chance?
I do, not quite as nice a home
as
that one.
You wouldn't. I was going to say you wouldn't drop down to those low standards, would you?
Oh.
But look at that. That's your doorstep. So
yeah, it's pretty special.
Pretty special. All right, let's have a look at the most clicked on auction listing. McGill
in Adelaide,
South Australia. Just to give folks sort of context on where that is, we'll quickly show you where. There we are. There's McGill.
What is it? Adelaide Hills almost, isn't it?
Yeah, but let's have a look at why everyone's having a look at this. And the surprises come a little bit later. There we go. Nice stone.
Massive block.
Yeah, looking pretty good. So we're starting to get a little bit of insight into what you can get inside. But wait, there's more. Nice view, as you say, of the Adelaide Hills. Comes with a swimming pool. And it also comes with that. What is going on there?
I think one of the owners is a artist. Makes puppets. It's actually did very well on our site in terms of readership.
No doubt.
Lots and lots of coverage. I think I made it to the Adelaide Channel 7 News as well.
Yeah, okay. Well, I wonder if this comes as part of the fixtures and fittings. So some of that stuff.
Spooky things there.
Even got a little
they had it as
there.
It was a haunted house story. Is how they pitched it. So it's certainly led to a lot of interest.
You've got a very quick backstory on the haunted house.
Yeah, very interesting. So I spent a bit of time in Hong Kong. We've got a site there called Square Foot, and their number one viewed article is actually a database of all the haunted properties in Hong Kong. So you can go onto this database and you can look up an address, and it will tell you if it's haunted, and their definition of a haunted property is someone that's been murdered or died a tragic death.
Grim death, yes.
And you can actually see how they died on the side. So
okay.
It's
all right.
I don't think it would do so well.
No, I'm thinking it might be something specific to Hong Kong, but
so they will pay. They like to know if a property is haunted, and they'll adjust their pricing according to a property being haunted. So I'm not sure if that will apply to this property.
We like beautiful period features over here in Australia. Sounds like the haunted house is really what gets them.
Yeah, they'll pay. I think you can it's usually around a sort of 20 to 25% reduction in pricing in Hong Kong if it's haunted.
All right. I don't know that that's in the seller's best interest to let that be known, but there you go. And then, of course, the most clicked on listing for a rental perspective is this little perla in Fortitude Valley. Looks like it's got a nice little sauna.
That sauna is very unusual.
I would have thought a little stone's throw, reasonable stone's throw to the South Bank.
Great spot.
But of course, it's at $270 per week. And what we found when we checked this out, it's always those little cheap and cheerful rents that really get a lot of clicks on your site. But thanks for coming in again, as you always do, giving us a wonderful insights across the economy, but also some of those little intricacies that you found on your site, which we certainly appreciate. But folks, we have a podcast each and every week on Thursday at 3 p.m. So if you want to check it out, go to thepropertycouch.com.au.